Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Sharifatul Zaidah binti Zainal Abidin. My metric number is 273752. So today I'm going to present one of the companies selected by our groups. Grand Central Enterprise Berhad is founded on 13 June 1968 by the late Tan Chee Ho and his son Tan En Tiong. This company engaged in hotel business, provision of limousine service, and hotel management service under the Hotel Grand Continental brands. It owns and manages hotels worldwide, including 11 hotels in Malaysia. This company has no information regarding MFRS 110 is disclosed in the notes of financial statements, except the concern on the COVID-19 outbreaks in 2019. This COVID-19 outbreak event can be classified as a non-adjusting event. Next, for financial ratio, the company shows a decreasing amount in the quick ratio in year 2018 to 2019, but the company is still able to cover all its short-term obligation using their most liquidated assets. As for inventory efficiency ratio, Grand Central Enterprise Berhad shows a decreasing amount from 2018 to 2019 in inventory efficiency ratio. It indicates that the company is less efficient in their inventory management. Next, for the trade receivable days, Grand Central Enterprise Berhad shows a positive result in collecting their trade receivables. The time taken to collect the receivables has decreased from 478 days to 321 days in 2019. Same goes to trade payables days. Grand Central Enterprise Berhad only took 321 days in 2019 to settle all their debts to the creditors compared to 2018, which is 376 days. Next, for sales to working capital ratio, Grand Central Enterprise Berhad shows a positive result in the ratio, which is in 2018, the company have a sales to working capital ratio is 0.39, but in 2019 it increases to 0.43. So it means that the company is more efficient in utilizing its working capital in supporting its sales revenue in 2019 compared to 2018. Lastly is working capital ratio. Grand Central Enterprise Berhad shows positive ratio for both year 2018 and 2019. However, in 2019, the working capital ratio is reduced from 782,939 ringgit to 595,430 ringgit only. So the decrease in the ratio shows that the company has less capital in 2019 to spend on its business. I think that's all from me. I'll pass this to the next presenter, that is Anis Shahira. Thank you.
Thank you, Zaida. Next, I will continue with our second selected company, which is Gadang Holdings Berhad. My name is Nur Anis Shahira binti Aziz. My metric number is 273656. The second company we choose, which is Gadang Holdings Berhad, is a company established on 4 October 1993. This company operated in 4 business segments, which are civil engineering and building, construction, property development, utility, and mechanical and electrical engineering. Their main business sector is construction. In 2019, there are one significant event occurring after the company's reporting period. On May 2019, the company announced that it proposed to undertake a private placement of up to 10% of the issued and paid up share capital of the company, which is known as placement shares. The placement shares were listed and quoted on the main market of Bursa Malaysia Securities Berhad on 12 June 2019. This is considered as adjusting post-balance sheet event occurring between the reporting date of 31st May 2019 and the date of issue is 4 September 2019. Because this event had provided additional evidence of conditions that the decision to undertake the private placement took place before the balance sheet date. Based on MFRS 110, this event will affect the amount recognized in the financial statement and need a journal entry. Next, I will continue with the financial ratio analysis of Gadang Holdings Berhad in 2018 and 2019. For the first ratio, based on the graph, the quick ratio of Gadang Holdings Berhad from 2018 to 2019 is decreasing. This ratio is not preferable as ratio below than 1 indicates that the company has problem to manage their liquid asset poorly to cover all of its short-term obligation. However, the ratio in 2018 is still better than the ratio in 2019. Next, as we can see from the graph, Gadang Holdings Berhad shows an increased trend of the inventory efficiency ratio from 2018 to 2019. This shows that the company are becoming more efficient in managing inventory as the company is able to sell 0.49 times its inventory for year 2018 and increase to 0.65 times for the year 2019. Next, the graph shows the decreasing trend of trade receivable days of Gadang Holdings Berhad from 2018 to 2019. It indicates that the company's collection of accounts receivable in 2019 is less efficient compared to the previous year, as they took longer time to collect their trade receivable in 2019 as compared to 2018. Next, as we can see, Gadang Holdings shows an increasing trend for trade payables day ratio from 2018 to 2019. The increase in the ratio from 2018 to 2019 indicates that the ability of the company to pay off their debt to the creditors in 2019 is less efficient compared to the previous year. This is because they took a longer day to pay for their trade payables in 2018 as compared to the previous year. Next, for the sale to working capital ratio, Gadang shows slight increment of this ratio from 2018 to 2019. The increase in this ratio indicates that Gadang is becoming more efficient in utilizing its working capital to support growth in sales by generating a higher ringgit amount of sales for every ringgit of the working capital used. For the last ratio, which is the working capital ratio, Gadang Holdings Berhad shows an increased trend of this ratio from 2018 to 2018. The increase in working capitals from 2018 to 2019 is favorable as it shows that the company is having more of net working capital to help the company to run its business. Looking from overall result of all 6 ratios that has been used to analyze this company, it can be said that this company has a moderate performance as only 3 out of 6 ratio used shows improvement in 2018 as compared to 2018. That's all from me. I will pass the presentation to the next presenter. Thank you.
Assalamualaikum. My name is Muhammad Nasrul Hakimi Azmi, matric number 273010. Okay, for this project, I have choose Globetronic Technology Berhad. For the background of this company has been established in 1991 as a technology sector. This company has a variety of products such as timing device, LED, encoder, and sensor. This company has been listed in KL Stock Exchange at 3 November 1997. And lastly, vision of the company is to be a global business partner. This company also have a significant event after reporting period. Alright, in 2018, there are one event. The event is the subdivision and bonus of ordinary share. In 2019, there are 2 events. The first one is development, new ASOS scheme replace ASOS 2014, and the second one, COVID-19 trigger uncertain market where the community operate. Alright, for the quick ratio, based on the graph, we can see they are increased from 2.95 to 4.84. So this situation shows that the company has no problem to cover all of its short-term obligation. For the next one is inventory efficiency ratio. So based on the graph, we can see they are decreased from 60.6 to 30.6. So we can say that the company has lost many sales in 2019 because has a lower purchases of inventory. For the next one is trade receivable day ratio. They are increased from 430 day to 512 day. So this situation show that the company took many time to collect its debt in 2019. For the next one is trade payable day. They are increased from 412 day to 423 day. So this situation show that the company has a problem to pay its debt in 2019. The next one is sales to working capital ratio. Based on the graph, they are decreased in ratio. So this company is excessively using account receivable and inventory to generate sale. The last one is working capital ratio. Based on the graph, they are increased in this ratio. So the company will still have an excess of asset even after he pay all of the current liability. All right. For the conclusion in MFRS S1, MFRS 110, the Globetronic have one event in 2018 and two event in 2019, and this company also use a ratio from year to year to measure performance of a company. Okay, that's all from me. Thank you.
Assalamualaikum to Prof. Kamarul. My name is Hanis Sofia binti Kamarul Zaman with metric number 273734. I am from Group 4 of Class G. Today, I am going to present about my chosen company in the project paper, that is Gagasan Nadi Cergas Berhad. First, I am going to explain about my company's background. Gagasan Nadi Cergas Berhad was formed in 1995 as a contractor of building construction works. As time passes, Gagasan Nadi Cergas Berhad has expanded its core businesses from only construction sector into three other sectors that are concessions, utility services and property development. Next, I am going to explain about Gagasan Nadi Cergas Berhad disclosure on MFRS 1110. In 2018, Gagasan Nadi Cergas Berhad has two significant events that occur after its reporting period. The first event occurred on 7 January 2019 when Nadi Cergas Berhad accepted a letter of award from Putrajaya Home Sindian Berhad to construct a public residential development. This event is considered as non-adjusting event because Gagasan Nadi Cergas Berhad entered into significant commitment after its reporting period. The second event occurred on 8 January 2019 when the listing of and quotation for the company's entire enlarged issued and paid up capital of 42 million comprising 140 million ordinary shares at an issue price of 30 cents each on the SCE market of Bursa Securities was completed. This event is also considered as non-adjusting event because it happens after Gagasan Nadi Cergas Berhad reporting period. In 2019, Gagasan Nadi Cergas Berhad only has one significant event that occurs after its reporting period. This event is the implementation of Movement Control Order throughout Malaysia that happens in March 2019. This Movement Control Order is considered as non-adjusting event because it is implemented after Gagasan Nadi Cergas Berhad reporting period ended. Now, I am going to explain about financial ratio analysis on Gagasan Nadi Cergas Berhad from year 2018 to year 2019. The first ratio that I am going to explain is quick ratio. Gagasan Nadi Cergas Berhad has quick ratio of more than 1 in both years 2018 and 2019. This quick ratio of more than 1 indicates that Gagasan Nadi Cergas Berhad are able to pay its current liabilities using its current assets. The quick ratio of Gagasan Nadi Cergas Berhad has increased from 1.54 in 2018 to 2.05 in 2019. This increase of quick ratio indicates that the liquidity position and ability of Gagasan Nadi Cergas Berhad to pay for its current liabilities using its current asset has improved. Now, I am going to explain about inventory efficiency ratio. Inventory efficiency ratio measures how efficient Gagasan Nadi Cergas Berhad in managing its inventory. The inventory efficiency ratio for Gagasan Nadie Cergas Berhad has decreased from 27.2 in 2018 to 10.25 in 2019. This shows that Gagasan Nadie Cergas Berhad has become less efficient in managing its inventory in 2019. Trade receivables days measures the time taken for Gagasan Nadie Cergas Berhad to collect its trade receivables from its trade debtors. The trade receivables days for Gagasan Nadie Cergas Berhad has increased from 319 days in 2018 to 398 days in 2019. This increase of trade receivable days indicates that Gagasan Nadie Cergas Berhad has become too lenient and less efficient in collecting its trade receivables from its trade debtors in 2019 compared to 2018. Meanwhile, the trade payables days measures the time taken for Gagasan Nadie Cergas Berhad to pay for its payables to its respective creditors. The trade payables days for Gagasan Nadie Cergas Berhad has increased from 306 days in 2018 to 373 days in 2019. This increase of trade payables days shows that the efficiency of Gagasan Nadie Cergas Berhad in paying off its debts to its creditors has declined. Sales to working capital ratio measures the efficiency of Gagasan Nadie Cergas Berhad in using its working capital to generate revenue. The sales to working capital ratio for Gagasan Nadie Cergas Berhad has decreased from 3.91 in 2018 to 2.42 in 2019. This decline in sales to working capital ratio shows that Gagasan Nadie Cergas Berhad has become less efficient in utilizing its working capital to support its sales as it uses its working capital fewer times in 2019 compared to 2018. The last financial ratio analysis that I'm going to explain in my presentation is working capitals. Working capitals measures the amount of current assets available for Gagasan Nadie Cergas Berhad to spend on its business operation after paying off all of its current liabilities. Gagasan Nadie Cergas Berhad has positive working capitals in both year 2018 and 2019. This positive working capital shows that Gagasan Nadie Cergas Berhad has excess current asset that can be spent on running and growing its business after paying all the current liabilities. The working capitals for Gagasan Nadie Cergas Berhad has increased from 2018 to 2019. This increase of working capitals shows that Gagasan Nadie Cergas Berhad has more capital in 2019 than 2018, which increases its ability to spend more money on growing its business. I think that is all from me. Thank you. I'm going to pass the presentation to the next presenter, which is Miss Nurul Ain Hamiza.
Hi, my name is Nurul Ain Hamiza and my number metric is 2736658. Okay, for the last company is Guh Holdings Berhad. Guh Holdings Berhad is actually an industrial product and services company which have three divisions, which is utilities, electronic and property development. This company has have only one disclosure in 2019, which regarding COVID-19 pandemic, and we are classifying as a non-adjusting event. Next, for the calculation, the first is the current ratio, which is show a positive trend, which means the company are able to pay its short-term debts. The next one is a quick ratio. It also show a positive trend, which means the company are able to pay the debt using its quick ratio. Next one is about the inventory efficient ratio. It show not so efficient ratio, as maybe because of the nature of the business. Next is about the inventory days. The same goes to inventory days. It show a decline trend, and it took a long time for inventory to turn into sales. Next is about the trade receivable day. It shows an increased trend, which means it's getting less efficient than 2018. so they took times to get the money from the debtor. Trade payables also, the same scenarios as trade receivable, as the company ability to pay creditor seems to be less efficient from previous year. Then about the sales to working capital, it show a decreased trend, which means the company are less efficient in utilize its working capital. For the working capital also, it show a decreased trend, which means they have less working capital than previously they have to run the business. The last one is about cash operating cycle. It show a decreased trend, which means it took less time for a company to transform its inventory cash investment back into cash. It shows a good performance of the company management. That's all from me. Thank you.